investors having a slew of big banks' quarterly results to digest later this week as earnings season gets underway. Joining us now, we want to bring in Kenny Polcari. He's Slatestone Wealth Chief Market Strategist. Kenny, it's great to have you here on set with us. So I think the big question is whether or not earnings is going to be enough to turn around this decline that we've seen.
Well, you know, it's interesting. They should be, but we're in a different tone, right? There's a different sentiment now about where people feel about the markets and where they feel about the Fed and where they feel about inflation. So earnings may be good, but if people are really worried about the Fed and inflation, that's going to I think that's going to trump. I hate to use that word in that way, but I think it's going to trump, the way people feel.
Who's on your Mount Rushmore of the commentary that we're going to hear from CEOs this earnings period?
Jamie Dimon is always my favorite.
Okay.
First of all, he's the first one to present as a Dow stock, right? That's the official start of the season. It'll be Wednesday this year. We'll hear from JP Morgan. But I always enjoy hearing from Jamie Dimon because I think he hits it on the head every single time, right? He never seems to disappoint. And he's got a really kind of methodical, robust way of looking out in the future and talking about what he thinks how the bank is going to do, what the economy is going to do, what he's expecting from the markets and from really the consumer. So he's my favorite.
Kenny, when it comes to what we'll likely hear, though, I guess there's lots to talk about whether or not the economy is going to hold up, what we're going to see when it comes to Fed rate cuts. What is the most important thing for investors to listen to that's going to give us that better?
So I think this earnings season, I think you have to pay attention to loan loss reserves. Loan loss reserves is that account that the big banks they fund to protect them against defaults, right? So mortgage defaults, credit card defaults. If we see those loan loss reserve accounts increasing in value, if they start putting billions of dollars into the loan loss reserve account, that gives you a sense of what they really expect, right? Are they expecting a tougher time? Are they expecting lots of defaults? Are they expecting people to default on their credit card payments or on their mortgage payments? For me, that's going to be a key as a consumer and as an investor, right? Yeah, sure, we'll hear about their M&A activity and all that stuff. But when it comes to really talking about the consumer and the economy, you have to watch what they're saying about their loan loss reserves.
When I was talking to Delta CEO Ed Bastian last week, especially around their earnings results and what they're forecasting going forward into the future, he's clear and quick to acknowledge that this is a multi-tiered consumer that we're talking about here, where you've got premium holding up, but at some of the kind of other tiers, you're seeing some real stress showing.
Right, and I'm not necessarily surprised, right? Because I think there is a certain consumer that is feeling very stressed, right? And if inflation starts to tick up its head, which it feels like it's going to do, that's going to just cause more stress, right? You saw on Friday in the NFP report that average hourly earnings year over year actually ticked down just a little bit, but it ticked down. This at the same time that we're seeing inflation beginning to tick up. So once again, we're going to run into that problem where is inflation going to run ahead of where average hourly earnings are, and that's going to create more stress, especially on kind of the middle income earner to the lower income earner.
Kenny, should the Fed be cutting again this year?
Absolutely not. And I am in the camp that not only are we not going to get another cut, but the risk is to the upside that, in fact, they're going to turn around and raising rates if inflation really rears its ugly head.
What will trigger them?
Yeah.
Sorry.
So I think there's going to be a couple of things. I think that this 100-point basis cut that they made the last 3 months of the year is starting to fuel inflation because they stimulated the economy at a time when I don't think it needed to be stimulated. I don't think rates at 4.5 and 4 3/4 is restrictive at all. Historically, it's very normal. And so I think that's part of it. I think the other part of it is, look, there's this new administration coming. We just saw Biden impose all kinds of sanctions on Russia, which is going to send the price of oil higher. And as the last couple of days have seen it spike higher, today it's higher. And higher oil prices are going to contribute, once again, it's going to help ignite that inflation monster because energy prices transcend across all sectors of the community, transportation, production, all that stuff. And so that's a concern. And then you have this new administration coming in, and there's lots of uncertainty around what they're going to do, how much they're going to spend, what they're not going to spend. Are we going to get the tax cuts? Are we not going to get the tax cuts? And so I think there's a lot of headwinds that are conflicting.
What's your top idea going into this next administration?
So I think you have to look at it. You have to understand where I am in the life cycle, right? I'm 63, so I have a different outlook than you do, right? You've got more time, I don't. So for me, I'm going to be much more staple. So I'm looking at healthcare, which was the underperformer in 2024. Actually, I think it ended the year slightly lower. But some of those big names, Merck and Johnson & Johnson and Lilly, some of those names have gotten absolutely crushed. They're on sale. They're down more than 25%. That's a great sale, right? And so for good names like that are good dividend payers, Johnson & Johnson and Merck, they're 3.5% divvy payers. Yeah. And they're the biggest names in the sector. So I like healthcare. I do like financials. I always like tech, but I'm not chasing tech. If tech goes on sale, I'll absolutely buy more because the future is tech.